What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to take a look over here at the Bitcoin price chart. We had some price action pulling down into levels we've been discussing about for the last week, causing it to lose its really kind of bullish structure it's had here on the short-term time frame. So we're going to talk about this here, just kind of on the smaller chart. Here, this is like the last 2 months of the Bitcoin price chart. Then we're going to zoom out much further. We're also going to talk about some economic data that was released last night from Walmart that also coincided with when this move in Bitcoin moved down. We'll take a look over at that. And we'll talk about what's coming up this week because we still have FOMC. We have the Federal Reserve coming out discussing in a couple of days. Tell us what the interest rate hike is, what their outlook is. And then later on in the week, we'll get the GDP results for Q2 that is expected to say that the United States has entered into a recession. And we've already had a lot of political attempts at trying to kind of like say, oh, no, we're not really in a recession. We'll take a look at all that stuff. First, we'll just look right here at the short-term action on Bitcoin, then take a bigger perspective look at it. For the last few days, we've been saying, hey, look, if Bitcoin pulls back down into these price levels, it's going to look awfully similar to what it's looked like in previous times where the price goes even deeper after that. So if we're not going to be holding these levels up in here, and especially if we pull back down into here, we're going to start looking a lot like what happens when another move down eventually comes. And when we had that breakdown happen yesterday evening for Bitcoin, we also had it happen over here for the Ethereum price chart as well, which is not what we were looking for continuation to happen in here with ranging and then moving on to continue into a retrace. So we saw Ethereum breakdown as well. So like we were talking yesterday, looking for confluence of things to happen. Well, Ethereum took out its range low and Bitcoin pulled right back into the box that we were looking at. It didn't touch below 20,700, but considering that we have Ethereum doing it and that Bitcoin did get all the way down here, it's looking more likely to me at least. I'm having a hard time finding any type of bullish structure to say, hey, this thing's going to rampage to the upside right now, barring some type of catalyst news coming out. In the last couple of videos, I've referenced back to this point that if we pulled back down into here, into this level, you can kind of see how the structure played out in here, how there was this little dip before it really popped out. Once it pulled back into here, there was kind of the sign that, hey, we're going to keep going back down. And that's exactly what we've had happen in here, right? So this was kind of our little dip before we broke out. Here we are, we're back in it again. And so you can kind of look back to these last times that we've been in here, that we break out, we pull back down into that dip in there. What does it do? It kind of consolidates for a minute, but then eventually broke down. Same thing goes in here, right? You got through it, pulled back down in here. Eventually, it ended up breaking down. So no telling if this does break down how deep it'll go. That's why we're going to take a zoomed out approach look here in just a second. But from my experiences and from looking at this chart currently right here, the fact that we've pulled back down into these levels right in here, it's hard for me to see any type of bullish structure. And with Ethereum also breaking down from its range, it looks like bears have taken a grip back on the market and that we pretty much had our very first earnings released out of Walmart and we saw the market kind of react to it pretty quickly. Now, for the record, the market expects poor earnings to happen right here. So it's not so much that when earnings come out, if they're poor, that the market's going to throw a tantrum over it. It's just, are they going to be worse than what the expectations were? So we'll talk more about that later in the video. But as for now, let's reiterate the things that we know going on the Bitcoin price chart from the bigger perspective. On the short-term time perspective, this structure that it's done in here by pulling back down to these price levels right here, mirror what happens of when another fall ends up occurring next. So that's the kind of setup that we have happening here on the Bitcoin price chart. The question that comes into play is how low could Bitcoin go if it is going to keep on going down? And that's the really big challenge in here. And I've tried to present so many things in here saying we're like at this really big supportive region, right? So we have moved down in a manner that is equivalent to what happens at the ending phases of capitulations and the ends of bear markets for Bitcoin. So we've already kind of gone that full distance in there. And at the exact same time, we're down here at this last Fibonacci retracement level, which is a 0.786. So we take into account the entire run that we had from March of 2020 till November of 2021. We've already pulled back a full Fibonacci retracement in there. The confluence of these two things happening at the exact same times builds a pretty strong case that, hey, there is some serious support that's happening right in here. We've also pointed to the Bitcoin over gold chart to show that it has come back to a support level over here on Bitcoin versus gold, which was the chart that was able to close the actual gap in here during the C19 sell-off, whereas the Bitcoin USD chart did not. The Bitcoin versus gold chart perfectly closed our gaps. So we have support here showing on this chart. In addition, the Bitcoin market cap chart also has perfectly nailed right back here on top of the all-time high. So it has a supportive level here too. So not only do we have fractals that end up playing themselves out, where we can see that these things are almost identical matches happening in here for the ending phase of a capitulation, with a near identical match happening in here with the same kind of pausing structure. And at the same time, these things went back to like the same retracement levels in here. You can see this got back to just above the 382 Fibonacci retracement, not quite getting to 50%. Same thing happened over in here. We got above the 382 Fibonacci retracement level, not getting to the 50%. So these things are pretty decent matches in here, along with the 786 Fibonacci retracement for the entire run that has happened in here. We pinpoint have nailed that same retracement level right in here, along with nailing the previous all-time high. So there's like this big confluence of all these things coming in for the support level in here. And not to mention, the only chart that was able to close the gap here back during the March of 2020 sell-off was the Bitcoin versus gold. That as well is on a support level as well. It's even a different support level sitting right there. So many confluences for that to be the actual bottom. So does this sell-off in here? Does this mean that we're going to have some type of move like this where it just comes in and it's still just going to keep kind of ranging down here in this area, working its way in here for a longer time period before it works its way out? Or are we going to crack through that thing? So if we crack through that, then obviously we're going to lose a ton of support that happens in here just from fib retracements, all-time highs, fractals, and even Bitcoin versus gold. So we'd lose all those things at the same time if we go any lower than that. So it's hard to sit here and say, hey, if we fall, we're definitely going to be cracking through all of these things. I don't know that. This seems like an incredibly important support level. And if we did take it out, one would think there's not going to be any support in here for at least another 30% down for Bitcoin. But there's no question, this is like a big, big support level. But the question is, are we going to go back and visit the bottom or go on even lower? That's going to be the big thing we're going to find out this week. But it does appear that we're not done with the bears just yet. Now, yesterday's video, I had the title of the thumbnail. It said the calm before the volatility, because we have a really big week coming this week here in the stock market and in the United States economy, where we're getting earnings releases, we're going to get a Federal Reserve interest rate hike, and we're going to get the GDP numbers coming out. So Walmart released their numbers yesterday, saying that consumers are struggling due to inflation. Walmart had anticipated that their earnings per share would stay about flat for the remainder of the year, but have now adjusted them to have them decline throughout the rest of the year. So the market had already priced in the negativity of that, hey, we weren't going to see an increase. We knew things were going to be tough, but now things are even worse than the market expected here for Walmart. And here it says the increasing levels of food and fuel inflation are affecting how customers spend. And while we've made good progress clearing hardline categories, apparel in Walmart US is requiring more markdown dollars. We're now anticipating more pressure on general merchandise in the back half. However, we're encouraged by the start we're seeing on school supplies in Walmart US. Food inflation is double digits and higher than at the end of Q1. This is affecting consumers' ability to spend on general merchandise categories and requiring more markdowns to move through the inventory, particularly apparel. During the quarter, the company made progress reducing inventory, managing prices to reflect certain supply chain costs and inflation, and reducing storage costs associated with a backlog of shipping containers. Customers are choosing Walmart to save money during this inflationary period, and this is reflected in the company's continued market share gains in grocery. So what all of this is saying is that consumers are spending a lot less money on other things than fuel and groceries, and that they're having to really bring prices down on their other items in order to get through their shipping containers, get through their backlog of inventory, which is what we've expected. Is the thing that we talked about. We expected that we'd see price drops throughout the summer on a lot of this additional stuff that all these retailers were sitting on. So they're going through, they're doing that, but they're kind of painting the picture that, hey, yeah, we're making progress at it, but we're really having to cut prices. It's really going to impact our earnings per share for the remainder of the year, because consumers are really being impacted on food and fuel inflation. And when that report was released last night, that's when Bitcoin fell from about 22,000 to about 21,000. And the Dow Jones took a spill as well. So why is the market not happy with this? These are all the things we talked about. We knew that prices were going to have to come down in order for them to get through their inventory. Walmart is reaffirming that's what they're doing. They're bringing prices down. They're seeing progress on it. However, they're not seeing enough progress on it, and they're saying it's going to take them even longer to get through all this inventory, and that they're going to have to drop prices even more throughout the rest of the year. Now, when I look at this long term, I say to myself, hey, once they get through this, like this is a temporary problem that they're going through, right? They're just sitting on way too much inventory. They just have to get through all of this inventory. Once they get through it, they'll be able to manage things a lot easier and they'll get back on the train of rocking and rolling for Walmart. But the hope was that they could get through that throughout the summer, right? Throughout the next few months, that they could get through a lot of these issues. But what they're saying is, hey, no, we're not going to be able to get through this over the course of the next few months. It's probably going to take us the rest of the year to be able to get through all of this. And that's why the market got upset at it. So definitely a rough message coming out of Walmart, but that's just the first of really a lot of big ones coming out this week. And I saw this posted over here by Jurian Timmer yesterday, over here on Twitter at Timmer Fidelity, the director of global macro at Fidelity. And he had posted, after all the hand-wringing about the next shoe to drop, a boring earnings season would be a relief. Q2 so far appears to be just that, with 72% of companies beating their lowered estimates by an average of 4.3%. Only 104 companies are reported so far, but it's a good start. And like we mentioned earlier, it's not so much that the news that's coming out of earnings is that they're performing worse than they used to. The expectation was that they lowered their expectations already. But are they doing better than what their lowered expectations were? Or are they doing worse than what their lowered expectations were? Walmart just came out and said they're doing worse than what their lowered expectations were. That's why the market got mad. But when we look at this, 72% of companies are doing better than what their lowered estimates were. And I don't track too many stocks out there in the market. There's so many of them. We could watch them all, but there's a handful of them that are usually on the right side of my screen. And one of them is GE, right? And GE announced quarterly earnings of 78 cents per share, which beat their expectations by 105%. So there's going to be some that come out here and win and that do better than their lowered estimates. But what Walmart did worse than their lowered estimates. So that's what we're going to be watching throughout the rest of this week and see how impactful that is in regards to actual earnings. And there's going to be lots of them this week, big names. And we'll see how the markets react to that. The market has priced in the lowered earnings, but will they be lower than what the lowered expectations were? We'll find out this week. And one would expect, as we just saw with Walmart, if there's a dip that happens in the stock market, it's likely coming to crypto. Next up is tomorrow that we're going to be having the announcement from the Federal Reserve in regards to interest rate hikes. It is expected that the Fed will raise interest rates by 75 basis points or 3/4 of a point, raising the federal funds rate to 2.25% to 2.5%. Investors will be looking for guidance from Powell on what the Fed could do at its next meeting in September. So we've pretty much had meetings every month and interest rate hikes every month. We will not have one in August. So there's going to be this bigger gap between the next time that we're going to have a Fed meeting and a rate announcement. So whatever words the Fed says right now is going to have to kind of guide the market for the next 2 months. The irony of their meeting is that the very next day is when we get the GDP release, so the gross domestic product release for the second quarter for the United States. So the Fed's 2-day meeting winds down on the eve of Thursday's release of second quarter gross domestic product, which is expected by some economists to show a contraction that would suggest the economy could be heading for recession. And some believe it technically would be in one because it would be the second negative quarter in a row. So the official definition of a recession is if you have two consecutive quarters of GDP contraction. That announcement is going to come the day after the Fed's rate hike. So the Fed's going to sit there and be able to talk all hawkish and say whatever they want. And then the next day we'll get the GDP numbers. So whatever they say could be completely thrown out the window. And it's almost just kind of like perfect timing on how that all works out, right? They're going to raise rates. They're going to say whatever they say. The very next day we're going to get GDP. It's going to say we're going to be in a recession. And then they are gone for 2 months. So the market's pretty worried about this order of events that's going to be happening here. And we're seeing very strong language coming from the political powers that be that say, no, this doesn't mean it's going to be in a recession. They're kind of trying to redefine the word recession and what it means. I'm not here. We don't talk about politics very often on this channel. It's not something I'm interested in doing. I'm not on either side. I'm not here to upset anybody in regards to their political views, right? Everybody's free to do whatever they want. I'm not here to persuade you to be one way or the other. But if you spend 5 minutes on Twitter, you'll essentially see things coming from Janet Yellen, President of the United States, everywhere, downplaying it, saying, this number will come out, but it does not mean that we're in a recession. Just because it's meant we're in a recession every other time, it does not mean we're going to be in a recession this time. So all eyes will be on the stock market this week to see how it responds to all of these things happening. As we could see, the market expects a lot of things, right? The market expects that there's going to be reduced earnings expectations for these earnings that come out. The question is, will they beat or will they do worse than what their lowered expectations were, then will the Fed come out and be consistent with the market expects in regards to the 75 basis points hike? Will it kind of massage the market sentiment and let the market feel good about what's happening, or will they be incredibly hawkish? And then how bad will GDP numbers be, right? Everybody expects a recession. So what are the things the market expects? The market expects reduced earnings. The market expects an interest rate hike. And the market expects that we're going to be officially labeled in a recession. These things are not going to be a surprise to the market. Everybody already expects it. Just will it be worse than that? That's what we're going to find out this week. So eyes are over here on the stock market. I did a video on this throughout the weekend, taking a peek over here at the Dow Jones Industrial Average on whether or not the whole thing has popped or not popped, and the levels that I'm looking to see hold. We could see that going into this week so far. We did start off yesterday a little bit green. Today we're going to start it off a little bit red. The market's going to open in about 45 minutes from right now as I'm recording this, but we could see also that the Dow Jones is still above the 50-day moving average in here right now. But will we lose it like Bitcoin did? That's what we're going to find out. But the main thing for me, for macro view right here, and saying, is the stock market completely popped, or is it going to go on and set one new all-time high? All comes back to holding that February of 2020 high where we're at right there. So big week this week. Nothing is a surprise to the market in regards to GDP and a recession, lowered expectations for earnings, and the Federal Reserve interest rate hike. All those things are expected, but will they be worse than that or better than that? That's what we're waiting for the rest of the week. And if this structure remains true for Bitcoin, as it has in the past, will a fall down here just be a fall back down to the lows, or are we going to take out the absolute major support happening in there? That's the thing we'll be watching this week. So expect it to be a bumpy ride throughout the rest of the week. We'll have lots to talk about in regards to macroeconomic data throughout the whole week. So we'll touch back on that stuff as it comes out. The big question will be, how do the price charts respond to it? So the big name on earnings that we'll get today will be Google. And then in the coming week, we'll still be getting Apple, Facebook, Amazon to get a better picture of how the consumer is doing. But all right, that'll be it for this one, guys. I hope that you're doing well out there. Just based on the structure that we have going on here, in the last several times that we've had this similar structure play out, it did go back down to the lows again. Nothing's a guarantee, but each time it did this, that's what it did in the past. So we'll see how things go, and we'll see how the info comes out throughout this week with the Fed, GDP, and earnings. But all right, on that note, I'm going to go ahead and wrap this thing up. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.